Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we help you understand the closing action of the stock markets. Also help you know which are the sectors and the stocks that are buzzing the most in trade and how should you be approaching some of the sectors and those stocks after the Q3 earnings as well. Let's also look at the current levels of the markets. Sensex hovering near 60,089, down about 170 odd points. Look at the Nifty as well. It's absolutely been trading in that broad range of 17,890, 17,900 from last 3 hours or so. We had opened up on a higher note, but then we could not sustain those gains and we actually erased most of those gains as well. 0.3% lower for the benchmark indices. What's causing this kind of a fall in the markets today? Well, most of the sectors of the Nifty are actually trading down in the red, including sharp fall that's coming in from the metals pack. Also, some of the other sectors that are dragging today include auto, financial services, private banks and realty space as well. The Nifty Bank overall is down by half odd percent. So that's where the pressure is coming in from. But there are some sectors who are looking a lot resilient at this point in time. One is the IT space that's up by 1.2% odd, and the PSU banks that have recovered from some of those losses that we saw in previous few sessions. 1.5% uptick for that one, and FMCG is slightly pulling itself up into the green zone as well as we speak. The broader markets are also down in the red, but they're absolutely flat with the negative bias. India VIX levels at 15 odd levels too, also stable throughout the trading session today. Most of the stocks are actually pointing towards declines. The market breadth, if you talk about in terms of the Nifty 50 stocks, 31 declines to 18 advances. In terms of the top stocks that are performing today are definitely the IT majors. Tech M, you have HCL Technologies, Wipro, Infosys, all up in the green, 1 to 2.5% uptake. Ultratech Cement also inching up higher. But what's creating some pressure? It's all stocks from different baskets. You have Adani Enterprises that's down in the red, NTPC, Axis Bank, Eicher Motors, these are the stocks that are dragging a lot. JSW Steel also down by 1.5%. But let's welcome our guest for the day. Abhishek Basumallick joins in. He's the founder of IntelSense In and also the chief equity advisor there. Abhishek, welcome to the show and thank you so much for taking the time out for this discussion. First up, your thoughts on the markets. Why are they sulking? Is it does it have to do with the global factors or are more incremental domestic factors also leading to this kind of a subdued trade?
I'm really sorry, but I can't hear you clearly at all.
Okay. Abhishek, can you hear me?
Can't hear you at all.
All right, we'll try and connect back to you and see if there is a technical glitch which we can resolve pretty fast. But definitely the mood of the day is the IT stocks that are actually looking quite good, even on a dull day. And remember, this is the index and this is the sector that did not work well for the entire 2022. But look at the kind of earnings that they have posted. Most of them have actually posted a beat on the revenue front. Some of them have actually posted a beat on the bottom line and on the margins front as well. Although the management commentary is just cautiously optimistic, the big question now is, after the IT sector, the big four, TCS, Infosys, Wipro, HCL Tech, the way that they have come out with their earnings, how do you really approach these big four stocks? Is it time now for you to really have a fresh look at some of these IT stocks? And can these stocks really give a recovery of sorts and show a sharp comeback in 2023 as well? Because most of these stocks have actually dragged about 20, 30, 40% as well in the previous year of the huge underperformance that is underway. Now, amidst the cautiousness, and the scare and the fear of recession, despite that, even in a seasonally weak quarter, if these major companies are able to show some promise when it comes to deal wins and client spending right there, does it make sense for you to really look at any of these stocks to come back into your portfolio as well? Let's look at whether we have Mr. Basumallick back with us to find out whether we can find out whether any of these stocks actually make for a good bet at this point in time. Mr. Basumallick, the big four that we are talking about, TCS, HCL Tech, Infosys and Wipro, all of their earnings now out, they have shown a demand picture resilience, but the near-term slowdown concerns in terms of spending, is that anything that you're worried about? And your thoughts on the entire IT pack right now? Okay, I think there is some technical glitch. We'll again try to fix that. But definitely this is one sector that definitely most of the experts are now looking they are looking at as a promising bet as well. IT giant TCS reported a revenue of 58,229 crore rupees in the third quarter, and this was higher than most of the estimates as well, which the street was penciling in. The management maintained the exit margin guidance for the current financial year at 25%, and despite the figure marginally missing the estimates for the December quarter, you do also have, when you talk about the other stock majors like, Infosys, that also reported a beat on the margins front, as well as when you talk about the deal wins, they were promising for that one too. HCL Technologies were definitely a much better earnings than both of these two majors as well. While on the other hand, when we talk about Wipro, there were some misses that we actually saw on the Wipro numbers, but you are seeing the stock reacting positively in today's trading action too. The other big talking point in today's trading session is that over the weekend, the other asset class, gold, really shone quite brightly. In fact, even today, we're looking at gold prices that are now hovering near all-time high levels as well. Remember, we've been discussing for a whole lot of 2022, there was a lackluster trade that we actually saw on gold prices, and they were not really moving anywhere. But gold prices have suddenly shown a sharp move on the positive side when it comes to 2023. We are just like sitting on 16th of January, and you already have a new price, an all-time high for the yellow metal right now. Remember, gold prices have breached the previous high of 56,191 rupees per 10 grams that was achieved in the year 2020, in the COVID year as well. But now we've seen a price of 56,562 rupees per 10 grams as well, and that's the kind of move that you've seen on the gold prices too. So now let's find out from our commodity expert as to whether this is the right time for you to really approach gold as a potential bet, and between markets and gold, which is the asset class that is likely to actually perform better as well. So let's welcome our guest for the day. Joining in is Mr. Navneet Damani from Motilal Oswal Financial Services. Mr. Manoj, thank you so much. Mr. Damani, thank you so much for taking the time out for us and for this discussion. Navneet Damani is the commodity and currency expert. You've heard him a lot of times, and even on gold, you actually heard him speak a lot about how he was bullish about the prices touching an all-time high level in the year 2023. So congratulations to you, Mr. Damani, for giving us those perspectives and the outlook on gold when we had a previous discussion in 2022. So a happy new year, and congratulations once again on this outlook. But now what do the investors do? We already have an all-time high price, and where do the prices head from here?
Well, thank you, Sakshi, and wishing you a happy new year to you all as well. Well, 2002 has been a very phenomenal year for gold prices, which probably for much of 2022 we saw very sluggish performance, but in the last quarter it caught up with almost all of the sluggishness and has delivered handsome returns. But that's largely on the domestic front. On the international bourses, you see prices are up about just mere 1%, whereas on international front, it is the rupee depreciation which is moved from 73 to 83, which has led to a lot of gains on the domestic front. And largely, to top it up, we had a 5% duty hike in the union budget, which adds up to the gain, and that is why we see domestic gold prices up about 15-16% in the year 2022. Now, for this year also, we started with the bang, and this year we see participation not only from the Indian front, but also on the international thing, should see some exhaustion, should see some pause. There are a lot of underlying factors which are kind of headwinds should gradually become tailwinds and should probably lend some nervousness to gold in the near future. But from a yearly point of view, I think many a sizable correction of about 4 to 5% from year on could be a good buying opportunity. Our targets remains intact towards 58,000 and upwards of 61,000 for 2023.
Okay, so higher prices for 2023. What about silver prices? We also saw the breaching of 70,000 mark right there. What is the outlook for silver? Navneet, if you can hear me, can you please tell me if there is a similar bullish outlook that you share for silver also, the white metal?
silver vis-a-vis gold, and that is exactly what has happened. Silver has given more returns, or probably faster and quicker returns as compared to gold. From 54,000, they swiftly moved towards 70,000, which is trading currently. And my bias still remains very, very positive on silver and expect it to target 80,000 and 85,000 in 2023. But from a risk reward point of view, we've seen a decent amount of rally, about more than 25% rally in the last few days or weeks. And from here on, risk reward is favorable, but it could get better if we see a reasonable retracement or price wise or time wise correction in the near future. So my bet is that from a short term point of view, both gold and silver. But from a medium term standpoint, we remain bullish in both. And between gold and silver, my bet still is on silver, and it could give you better returns vis-a-vis gold.
Okay, I have to ask you one last question for all those investors who love buying gold, who love buying silver as well. At these prices, does it make sense for them to add on, in view of that there it could be the prices hike, or would you suggest them that, they should wait it out and then look for a better opportunity, perhaps some dips to add gold to their portfolios now?
See, what we were targeting for the first quarter of 2023 is happened in the first 15 days of 2023. So I would probably wait for the next couple of months for a price-wise correction or a time-wise correction before entering the market now. I believe that at the current juncture,
All right. All right, I
you
guess
have
we are
not
facing
much
some
time
technical
left for
glitch. We'll
lucrative to
come
add
back
gold
on that.
from
Thank
a
you
long-term
very much,
standpoint.
Mr. Damani, for sharing your outlook on the commodity prices and both gold and silver. How do the investors really see the prices moving from here on, and what is the right approach for them to really look at over here? Let's come back to the markets and see how are we going to close the day with 60,112, 150 points down for the Sensex. The Nifty also hovering near 54 points down lower, 17,900. That's the level you need to watch out for. Perhaps we'll see one more attempt before closing, just about 8 minutes now before the markets shut shop, but there could be one more attempt that the markets hover near this level and attempt to close higher than 17,900 as of now. And we'll also keep an eye out on how the global markets really open up later in the evening, and the Asian markets also, to give us an understanding of whether this week could be a week of more bounce back action that you can see. Already we have seen some kind of a pullback on the mid and the small cap indices, but do we see a sharper bounce tomorrow is something that we will definitely keep an eye out on. Many thanks for joining us on this edition on Business Today TV. Do stay tuned for a whole lot more on markets and from the world of business on Business Today TV. Many thanks.